we have completed few topics in the last session. So we are now continuing with the remaining portion. So now we are going to discuss chapter number 5, unit 2, that is value of supply. Questions, test your knowledge questions on value of supply. So look into the first question. Are post supply discounts eligible for deduction from the value of supply in all situations? Explain. So discounts are divided into three. Discount given before or at the time of supply, which is always allowed as deduction. If the discount is given after supply, but the terms are agreed before at the time of supply, then also it will be allowed as deduction. So post supply discount is allowed as deduction provided the terms are agreed before at the time of supply and the supplier issues a credit note to the recipient and recipient reverses the ITC. So two conditions. Not always post supply discount is allowed as deduction. If two conditions are satisfied, it will be allowed as deduction. Condition number 1, that the term should be agreed before or at the time of supply. The term should have been agreed before or at the time of supply, and ITC related to that needs to be reversed by the recipient. If these two conditions are satisfied, so then it will be like post supply discount is allowed as deduction. Then question number 2. Question number 2, consideration under GST law includes both monetary and non-monetary consideration. True. So section 2 clause 31 of CGST Act gives a meaning of consideration. Consideration means any amount received or receivable. It also includes any other consideration in kind. Okay. So monetary, non-monetary both are treated as consideration. So you can see here the definition of term consideration includes both payment in money or otherwise, but that should be in respect of for the inducement of supply of goods or services, and any deposits which are refundable in nature or subsidy from central government, state government, that will not be taken into account. Okay. And so it not only includes cash but also check, promissory note, even non-monetary consideration will also be coming. Then question number 3. Sharp Minds Institute provides coaching for engineering entrance examination. Monthly fee charged by the institute from a student is 10,000. The institute is known for its commitment to provide education to unprivileged children. It trains 10 students every year for entrance examination free of cost. The institute has received 3 lakhs as coaching fees during the month. Navjeevan, an NGO working in the area of education for underprivileged children, has given a subsidy of 10,000 in lump sum during the month to the institute as it is serving the cause of unprivileged children. Determine the value of supply of education service made by Sharp Minds Institute during the month. First, subsidies are broadly divided into 2. That is directly linked to the price and not directly linked to the price. If subsidy is not directly linked to the price, it will not be considered in value. So means that is ignored. If subsidy is not directly linked to the price. In this case, this subsidy is not directly linked to the price. What is the meaning of directly linked to the price? Directly linked to the price means that subsidy should be given with respect to our outward supply. Here, is this 10,000 rupees for every student? No. This 10,000 rupees is not every student. If the subsidy is given with respect to every product sold or every service rendered, then it will be directly linked to the price. In this case, it is not directly linked to the price because this subsidy is a general subsidy, ad hoc amount, so not directly linked to price. Therefore, it will be ignored. It will not be taken into value. So then the value will be taken as only 3 lakhs in this case. So in this case, only 3 lakhs will be taken. And section 15 subsection 2 clause E deals with the subsidies. So subsidy directly linked to the price, excluding subsidy from central government or state government, will be taken. In the given case, even though it is from other than government, but it is not directly linked to the price, that's why it is not includable in the value. Then number 4, Furniture Wala is a chain of retail showrooms selling both modern and classic furniture. In order to build strong customer association, the showroom provides free delivery of the furniture at the premise of the customers. if the distance between the showroom and the customer's premises is up to 20 kilometers. Where the distance is more than 20 kilometers, the showroom charges a concessional freight of rupees 10 for every additional kilometer. Miss Leena Kapoor purchased a double bed. So their policy is that if the distance is within 20 kilometers, it's a free delivery. Otherwise, for every kilometer, they will be charging 10 rupees. Miss Leena Kapoor purchased a double bed, a dressing table and a center table for 2 lakhs from Furniture Wala. Miss Leena gets free delivery of the furniture as her residence is located at a distance of 18 kilometers from the showroom. The showroom incurs an expenditure of 1000 for delivering the furniture. So we have an inclusion, section 15 subsection 2 clause C says that any expenditure incurred by the supplier and charged to the recipient before or at the time of delivery of goods will be included in the value. In this case, even though they are incurring expenditure, supplier is incurring an expenditure of 1000 rupees, but they are not charging it to the recipient. Why? Because as the distance is within 20 kilometers, they are giving free delivery, they are not charging it to the recipient. In that case, this 1000 rupees will not be included in the value. So we will take only 2 lakhs as the value in this case. So only 2 lakhs will be taken. Now, there is another part in this question. Determine the value of taxable supply made by Furniture Wala. Will your answer change if residence of Miss Leena is 50 kilometers away from the showroom? So yes, there is no free delivery. So 30 kilometers extra. For the 30 kilometers, 10 rupees per kilometer, that will be rupees 300 is charged. Even though they incur 1000 rupees as freight, but they are charging 300. So that 300 rupees only will be included in the value as per section 15 subsection 2 clause C, and therefore the value will be taken as 2,300,000. That is the answer for this. Then question number 5. ICAI Foods Private Limited gets an order for supply of processed food from a customer. The customer wants the consignment tested for gluten and specified chemical residues. ICAI Foods Private Limited does the testing before the supply and charges a testing fee for the same from the customer. ICAI Foods Private Limited argues that such testing fee should not form part of the consideration for the sale as it is a separate activity. Is the company's argument correct in light of section 15? Is this testing done before or after delivery of goods? We need to check. So this testing is done before delivery of the goods. So then any expenditure incurred by the supplier and charged to the recipient before or at the time of delivery of goods should be includable in the value in terms of 15.2c. Therefore, as the testing is done before delivery of the goods, the charges therefore will be included in the value. Okay. Then question number 6. A philanthropic association makes a substantial donation each year to a reputed private management institution to subsidize the education of low income group students who have gained admission there. The fee for these individuals is reduced, thereby coming to 3 lakh a year compared to 5 lakh a year for other students. What would be the value of service of coaching and instruction provided by the institution to the low income group students? Here 5 lakhs is the regular fees and 3 lakhs is the reduced fees. Then what will be the subsidy? Subsidy is 2 lakhs. Subsidy is 2 lakhs. And this subsidy is directly linked to price. How? Because this subsidy is given with respect to every student, so which means that it is directly linked to the price. And it is from other than central government or state government, therefore it is to be included. Now if you take 3 lakhs, to arrive at 3 lakhs, already 2 lakhs is excluded. First, subsidy from other than CGRSG is to be included. And if you take 3 lakhs, in the given price of 3 lakhs, subsidy is already deducted. So we need to add. So we need to remember first, an amount is to be included. And in the given price, it is excluded. So we need to add. So then we will get 5 lakhs as the value. So value will be taken as 5 lakhs. Suppose if you take 5 lakhs as the price, then, so as per provision, this subsidy is to be included. and in the given price 5 lakhs it is already included, so ignore. So 5 lakhs will be taken as value. Anyway we can take, if you take 3 lakhs you add 2 lakhs to get 5 lakhs, or if you take 5 lakhs ignore that subsidy. So 4 points we should always keep in mind. An amount is to be included, in the given price it is already included, ignore. Second, first as per provision we need to see. First as per provision we need to see what is the treatment, okay. As per provision what it is, and in the given price what they have done, and based on that the treatment is followed. As per provision it is to be included, and in the given price it is already included. Then what is the treatment? Ignore. We don't have to do anything. So for example, packing charges is to be included because it is before delivery of the goods, and in the given price it is already included, so ignore. Then second, as per provision an amount is to be included, and in the given price it is excluded. So what we need to do? We need to add. For example, subsidy from other than CG or SG directly linked to the price to be included. In the given price it is excluded, so we need to add. Then number 3, as per provision an amount is to be excluded, and in the given price it is already excluded. So then what we need to do? Ignore. For example, as per section 15 subsection 2 clause A, taxes, duties, cess by whatever name called other than GST should be included, means GST should be excluded, and in the given price say GST is already excluded, so no need to exclude it again, ignore. Number 4, an amount is to be excluded, and in the given price it is included, so what we need to do? We need to deduct. For example, discount is to be excluded, discount given before supply is to be excluded, and the given price is so before discount, so we need to deduct. So these are the 4 points that we will apply. So subsidy related also the same. So subsidy, we have only 2 points in subsidy. There are 2 views, view 1 and view 2. View 1 and view 2 is there, 2 views are there. We can take the given price after considering subsidy, price after considering subsidy. If the price is after considering subsidy, which means subsidy is reduced. In the given price subsidy is reduced already, okay, that is a meaning. Price after considering subsidy means in the given price subsidy is reduced. Price without considering subsidy, which means in the given price subsidy is not reduced, okay. Now first we will take the value, that is transaction value. Price we will take, okay. Say the price is 10,000, and subsidy from CG or SG, that is 2,000. Now if you take view 1, price after considering subsidy, means already this 2,000 has been reduced to arrive at 10,000, and this is to be excluded. In the given price already it is excluded, therefore we will ignore. Suppose if it is subsidy from others, and that subsidy from others, that is 1,000. So in the given price it is to be included, and the given price is after reducing. So price after considering subsidy means subsidy is reduced to arrive at 10,000. So 1,000 rupees is to be included, in the given price it is excluded, so we need to add. So then the value will be taken as 11,000. Suppose if you take view 2, price without considering subsidy means subsidy is not reduced in the given price. Subsidy from CGSG 2,000, it is to be excluded. In the given price they have not deducted it, so we need to deduct it now, 2,000. Then subsidy from others 1,000 rupees is to be included. In the given price it is already included, so we will ignore. So then the value will be taken as 8,000. So depending upon which view is given in the question we need to take. Suppose in the absence of any information in the question, we will follow view 1 assumption. So because many cases ICAI follows that assumption in many questions, due to that reason view 1 we will follow. So this is related to that subsidy point. So already I explained that, but I am just giving you the clarity related to this. Then second question, Mazda Banners, an advertising firm, gives its customers an interest-free credit period of 30 days for payment. Its customer ABC paid for the supply 32 days after the supply of service. Mazda Banners waived the interest payable for delay of 2 days. The department wants to add interest for 2 days to the value of supply. Should the notional interest be added to the value? As per section 15 subsection 2 clause D, interest, late fee or penalty for delay in receipt of consideration should be included in the value and chargeable to GST. Only when that interest is charged to recipient. In this case, yes, Mazda Banners is having right to receive that interest, but they are not charging that interest to the recipient. When they are not charging that interest to the recipient, so then it will not be includable in the value. Then, so other subsidy, yes, other subsidy divided. First of all, the major division is directly linked to the price, not directly linked to the price. Not directly linked to the price needs to be ignored. Directly linked to the price is divided into two, from CG or SG or others. From CG or SG to be excluded, from others it is to be included. Not directly into the price to be ignored. This is the simple classification. Then question number 8. Crunch Bakery Products Limited sells biscuits and cakes through its dealers, to whom it charges the list price minus standard discount and pays GST accordingly. When the goods remain unsold with the dealers, it offered additional discount on the stock as an incentive to push the sales. Can this additional discount be reduced from the price at which the goods were sold and concomitant tax adjustments be made? There are two discounts here, standard discount and additional discount. Standard discount is a pre-supply discount, so which will be allowed as deduction always, whereas additional discount is a post-supply discount. That will be allowed as deduction, provided the terms are agreed before at the time of supply, which is not here. They have not agreed for any terms. Due to that reason, it is not allowed as deduction. So therefore, this post-supply discount cannot be reduced from the price. Then question number 9. Red Pepper Limited, Delhi, a registered supplier, is manufacturing taxable goods. It provides the following details of taxable interstate supply made by it during the month of March. List price of the taxable goods supplied interstate exclusive of taxes is 15 lakhs. This is the list price. And so we need to take this as the base, 15 lakhs. Subsidy received from central government for supply of taxable goods to government school. And this is exclusively related to supply of goods including serial number 1, means it is directly into the price. This information exclusively related to supply of goods included serial number 1 means it is linked to price. Okay. So this is a directly linked to price subsidy, and this subsidy is from central government. As per provision, it is to be excluded as per provision. Now what happened in the given price? The list price of the goods is net of 2 subsidies received. Net of 2 subsidies means subsidy is reduced to arrive at the given price. So this subsidy from central government is to be excluded. In the given price it is already excluded. Therefore we will ignore. We will not take this. Then subsidy received from a NGO for supply of taxable goods to an old age home. Again, this is also directly linked to price, but it is from others. So as per provision, it is to be included, and in the given price, it is excluded. Where is it given? It is given that net of 2 subsidies, so excluded. So we need to add. We need to add this 50,000. Then tax levied by municipal authority, municipal taxes. So the second point and third point is related to section 15 subsection 2 clause E. 15(2)(e). Whereas this tax levied by municipal authority is as per section 15 subsection 2 clause A, which says that all taxes, duties and cess by whatever name called other than GST should be included in the value. So this is municipal tax to be included in the value, but in the given price it is included or not. The given price is exclusive of taxes, so we need to add. So this municipal tax is to be included in the value as per provision. In the given price it is not included, so therefore we need to add 20,000. Then packing charges, as per section 15 subsection 2 clause C, incidental expenses or any other expenses charged by supplier to recipient before delivery of goods or at the time of delivery of goods is to be included. So this packing charges is incidental expenses, definitely it should be included in the value as per provision. But we don't know whether in the given price it is included, we have that information. However, the other charges, taxes, fee are charged to the customer over and above the list price. Means this is in addition to the list price. So packing charges to be included, in the given price it is not included, so we need to add. Then late fee paid by the recipient of supply for delayed payment of consideration. Recipient has agreed to pay 6,000 in lump sum and no additional amount is payable by him. So interest, late fee or penalty for delay in receipt of consideration is included in the value. And here they gave one word, this 6,000 is received in lump sum, which means that 6,000 is inclusive of GST. That 6,000 is inclusive of GST. And what is the rate of GST? 18%, at 18%, which means we should not add full 6,000 into the value. We need to take, definitely it should be included in the value, but we need to take only 100 divided by 118. Why? Because it is inclusive of GST and GST will never form part of value. Because as per section 15(2)(a), all taxes, duties and cess by whatever name called other than GST only should be included in the value. So that's why we need to take the 6,000 part related to value, 6,000 into 100 divided by 118, that will be 5,085 will be taken, 5,085. Now this is to be included. And generally interest to be treated separately if we know the date on which interest is received. Suppose if we know the date on which this interest is received, we need to give a debit note for that, so that should be shown separately through debit note. As there is no information related to the date on which it is received and they are asking us to compute the value, we will regularly add this. So now if you see the total 15 lakhs plus 50,000 plus 20,000 plus 15,000 plus 5,085, that is 15,90,085. 15,90,085 will be taken as the value, and we need to give the proper explanation as to why it is to be included, excluded, etc. Then next question, question number 10. Messrs. Flowpro, a registered supplier, sold a machine to BP Limited. It provides the following information in this regard. Price of the machine excluding taxes and other charges mentioned at serial number 2 and 3, 25,000. So price of the machine excluding taxes and other charges mentioned in 2 and 3. Okay. Now third party inspection charges. Third party inspection charges, such charges were payable by Flowpro. Supplier has to pay the charges, but the same have been paid by BP Limited recipient to the inspection agency. These were not recorded in the invoice. So we have section 15 subsection 2 clause B, one inclusion, which says any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. So in this case, this 5,000 rupees is to be payable by supplier but paid by the recipient, that should be included in the value, and this 5,000 as per provision to be included, and in the given price it is not included, clearly given other charges mentioned in 2 excluded. So we need to add, as per provision it is to be included, in the given price it is not included, so we need to add. Then Number 3, freight charges for delivery of the machine. So Messrs. Flowpro has agreed to deliver the goods at BP Limited premises. As they have agreed to deliver means this is before delivery. This transportation charges or freight charges is before delivery. As per section 15, subsection 2 clause C, incidental expenses or any other expenses charged by supplier to recipient before delivery of goods should be included in the value. So in this case, this 2000 rupees to be included in the value. And so what happened in the given price? In the given price it is excluded, 2 and 3 it is excluded, so we need to add. Then point number 4, subsidy received from the state government on sale of machine under skill development program. Subsidy is directly linked to the price. So this subsidy is from state government and this is directly linked to the price, then it should be included in the value or excluded to be excluded from the value. And so whether we need to know in the given price whether subsidy is considered or not, the price of the machine is net of subsidy. So this subsidy as per section 15 subsection 2 clause E to be excluded because it is from state government, and in the given price it is already excluded, so therefore we will ignore. Then discount of 2% is offered to BP Limited on the price mentioned in serial number 1 above and recorded in the invoice. So discount is offered 2%, but we don't know whether the given price is before discount or after discount, not given. Excluding tax and other charges, they have not given. So which means the price is before discount. So this discount is before supply, pre-supply discount, and it is allowed as deduction. So therefore in the given price we need to reduce 25,000 into 2%. So that will come to 500. So 500 will be allowed as deduction, pre-supply discount. So what will be taken as the value? 25,000 plus 5,000 plus 2,000 minus 500, that will be 31,500 will be taken as the value in this case, 31,500. Then another question, question number 11. Shri Krishna Private Limited, a registered supplier, furnishes the following information relating to goods sold by it to Shri Balram Private Limited. Price of the goods excluding taxes and other charges mentioned at serial number 3, 5, 6. So this 3, 5 and 6 are excluded in the given price. Even taxes also excluded in the given price. Okay. Now, so we will take 1 lakh as the base, 1 lakh. Municipal tax as per section 15 subsection 2 clause A, municipal tax to be included in the value, and in the given price it is excluded, so we need to add. Then inspection charges as per section 15 subsection 2 clause C, inspection charges is pre-delivery charges. Before delivery of goods only inspection will be done, so therefore it is to be included. In the given price it is excluded, so we need to add. Subsidy received from Shri Ram Trust, and it is directly linked to price, so it is to be included. Other than central government, state government, it is to be included. And in the given price it is excluded. Price of the goods is net of subsidy, it is excluded, so we need to add. Then late fee for delayed payment inclusive of GST. So this late fee, Shri Balram Private Limited paid the late fee, however these charges were ultimately waived by Shri Krishna Private Limited and the amount was refunded in the same month. So then it is not at all charged. Only when the interest is collected it will be chargeable to GST. So interest is chargeable to GST, interest on account of delay in receipt of consideration, interest, late fee or penalty for delay in receipt of consideration chargeable to GST on receipt basis. So here they have not received, so therefore there is no chargeability. Weighment charges. Suppose if that late fee collected this month and waived in the next month, then for this month we will add and next month we will reduce. Okay. But it is refunded in the same month, so that's why we are not taking. Weighment charges Such charges were paid by Shri Balram Private Limited to Radhe Private Limited on behalf of Shri Krishna Private Limited. So recipient is making payment to some other person on behalf of supplier. Section 15 subsection 2 clause B. So this subsidy related point is 15.2e and this interest late fee point is 15.2d and this payment charges 15.2b. It is to be included in the given price, it is excluded, so therefore we need to add. So therefore these are the adjustments to be made. 1 lakh plus 2000 plus 15,000 plus 50,000 plus 2,000, that will be 1,69,000. 1,69,000 will be taken as the value. Then next question, question number 12. Kohli Limited, a registered supplier, has supplied machinery to Geisha Limited, a supplier registered in the same state. It provides following particulars regarding the same. Price of the machinery exclusive of taxes and discounts 5,50,000. So exclusive of tax and discounts. Here what is the meaning of exclusive of tax and discounts? Means before tax and before discount. It does not mean excluding discount. Excluding discount means discount is deducted, but this exclusive should be understood as before. This exclusive should be understood as before tax and before discount. That is the meaning. So we will take 5,50,000 as the base. Part fitted in the machinery at the premise of Geisha Limited. Amount has been paid by Geisha Limited directly to supplier. However, it was Kohli's liability to pay the said amount. The said amount has not been recorded in the invoice. As per section 15 subsection 2 clause B, any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. Okay. So in this case, so it is to be included in the value as per provision, and in the given price it is not recorded, so therefore we need to add. Then installation and testing charges for machinery not included in the price. So installation and testing is done before delivery. So it is to be included as per section 15 subsection 2 clause C. It should be included because it is before delivery. And in the given price it is not included, so therefore we need to add. Then discount at 2% on the price of the machinery mentioned at serial number 1 above, recorded in the invoice. Discount is allowed as deduction because it's a pre-supply discount. So now we should take this discount, that is this price before discount, which means 5,50,000 into 2%. 5,50,000 into 2%, 11,000. So we need to reduce that 11,000. Then Kohli Limited provides additional discount at 1% at the year end based on additional purchase of other machinery for which adjustment to be made at the end of the financial year. So this is a post-supply discount and the terms are not agreed. Nowhere it is given that the terms are agreed. Means condition not fulfilled. So we will not consider this discount. Now the value will be 5,50,000 plus 20,000 plus 25,000 minus 11,000, that is 5,84,000. 5,84,000 will be taken as the value in this case. 5,84,000. So with this we completed questions on value of supply given in study material. Yes. So what is your query, pa? Sir, what have you mentioned about debit note? That is, whenever we receive the interest or late fee or penalty for delay in receipt of consideration, a debit note will be given by supplier to recipient. Okay, debit note will be given by supplier to recipient, and this debit note, so we need to show that separately in the answer, provided we know the date on which that interest is received. Interest or late fee, we know the date. So invoice date is different, the date on which interest received is different. So on the date on which interest is received, we need to give the debit note. So like that we need to separately show that. Suppose if we don't have the information as to the date on which we received the interest or late fee penalty, normal computation itself you can add the interest, but remember, if that interest is inclusive of GST, take out the GST and add the remaining part. Then question number 10, point number 5. What is that? Question number 10.5. So discount is allowed as deduction. So why that is connected to 15.2d? So 15.2d is interest related. This is discount. Nowhere these two are connected. Pa. Sir, will you discuss past year papers? All these are past year papers only. So institute, what they will do is that from attempt to attempt, what they will do, so those questions which are relevant, so they will be taking those questions and they will be giving at the end of the chapter. So these are all past exam, RTP, MTP questions only. So these are not something different. Okay. So suppose if some questions are irrelevant, they will be ignoring that because those questions are based on the amendments at that particular time. So these are the questions which are applicable. So these lines only, the past year exam questions also, maybe the numbers and the names they will change, but these are those questions.